nimeona ameend koja
Okay.
The conduct of meeting, this will just be for my consumption. So the only thing you will protect for the members will be maybe when I start with the chairman's report. Or no, don't do it. Yeah. Yeah, that's what, yeah. And then you report it to show what we have seen, yeah.
As you continue reading, the cost of running the PowerPoint will continue going down.
Yeah.
Hi, how are you? You've seen my email? Sending RPS, AGM, they're the ones who are playing for us music. I don't know how.
Chairman, we are ready.
We're ready
Morning.
to start?
Yes, Chairman.
Okay, let me start by saying good morning to everybody and welcome to this, the Defined Benefit Scheme Annual General Meeting, which is being held today on the 25th of September 2020. Can you all hear me?
Yes, we can hear you, Chair.
Perfect, thank you very much. So I'd just like to start by first welcoming everybody. It's with great pleasure to welcome you all to this first virtual KenGen Staff Retirement Benefit Scheme Annual General Meeting for the year ended 31st of December 2019. May I please request Ms. Stella Wachira to lead us in prayers.
Thank you, Chair. Can you hear me?
Yes, we can. Thank you.
Okay. Let us all bow our heads in reverence to God. In the name of the Father, and of the Son, and of the Holy Spirit. Amen.
Amen.
Almighty and ever-living God, we come before you this morning with thanksgiving in our hearts. We are grateful, Almighty Father, for the gift of this day. During this time, Father, we cannot take your gift of life for granted. Everlasting Father, we commit this annual general meeting for the KenGen Retirement Benefit Scheme into your mighty and able hands. Father, we entrust our sponsor KenGen into your hands. May our company continue to serve you diligently. Almighty Father, we ask you to guide and direct the Board of Trustees so that whatever decisions that they are entrusted to make on behalf of the contributors, they may make according to your Holy Spirit's guidance and inspiration. We ask you to be with the Secretariat, that the employees will continue to work with diligence and integrity. Father, we commit all the members, pensioners, and beneficiaries, as well as the service providers, into your hands, that your grace, mercy, and blessings may continue to be showered upon every aspect of their lives. We thank you, Father, for the service providers, because they enable the scheme to run through the various services that they provide. We ask all this through your Son, our Lord Jesus Christ, who lives and reigns with you and the Holy Spirit, one God, forever and ever. Amen.
Amen.
In the name
Thank
of the
you.
Father, and of the Son, and of the Holy Spirit. Amen.
Amen.
Thank you, Stella, for the wonderful prayer. May I ask the Trust Secretary to advise if we have a quorum?
156 members.
We can't hear you, Bwana Trust Secretary.
Sorry, Chair. We have 157 members who have joined us for the AGM, and I can hereby confirm that we have a quorum to start the meeting.
Okay, a quorum being formed, I declare the meeting to be properly convened and duly constituted. Let me just start by reading the rules of the meeting. Members, we hope to have an interactive session. The Trust Secretary shall run random polls during the webinar and request for your participation. In addition, we have set a session after we receive all presentations of the day in which members can ask questions. At that time, you may virtually raise your hand. We, however, encourage you to post your questions on the Q&A platform as we carry on, which our panelists will respond to as they come in. I hope this will be in order. So, Mr. Trust Secretary, kindly share the first poll.
Thank you, Chair. I request the host to post the first poll. And the first poll, this is only for members, the attendees, people to answer, not the panelists. Host, please. Okay. The first poll, we will only take 30 minutes, that seconds, sorry. And just a confirmation of which scheme the member is into, DB scheme, the old scheme, DC scheme, the new scheme, or if you're a member of both scheme, that is DB and DC, or you are not member of any of the following schemes. We give 30 seconds to have this question and poll answered. So in the next few seconds, we'll be adding this poll. And the audit scheme is the audit scheme, DC scheme, the new scheme, and we have members who were in the audit scheme and moved to the new scheme, and they're in both schemes. And we also have the question can only be answered by either an attendee, but not a panelist, and also only attendees can be able to answer the question. And I hereby request the host to display the answers or the results. Chair is a confirmation. We have 12% of members who are DB members. DC scheme are the majority, no, 43%. And also we have a big membership of members who are members of the B and DC scheme, 44%. And we also have one member who is a non-member of either schemes. Thank you, Chair. We can proceed.
Okay. My only question is the person who's a member of no scheme. I'm not sure if they're in the right meeting, but maybe we can just check and confirm.
Thank you. We'll do that.
I'll then ask the members of the meeting to allow me to introduce the board. So joining me today are all members of the board. The board is comprised of highly qualified trustees. Oops, sorry. The board is comprised of highly qualified trustees with the skill sets and backgrounds needed to provide effective oversight of the scheme assets. Their detailed profiles can be found in the online copy of the annual financial report. I will introduce them as their pictures run to the screen. That starts with myself, Mr. Joseph Sitati. I am sponsor appointed and chairman of the scheme. I'm waiting for the picture to move. Next, we have Mrs. Rebecca Miano, who is sponsor appointed and also our CEO and MD of KenGen. Next, we have Trustee Mr. Abraham Serem, sponsor appointed, who's also our head of HR. Next, we have Mr. Paul Ndungi, sponsor appointed, who's also our company secretary. Next, we have Trustee Ms. Mary Malu, who's also, she just gotten a new job, sorry, I've forgotten, TS helped me. Next, we have Mr. Ernest Nadome, member elected, who also represents the workers. He's also chairman of the DC scheme. Next, we have Mr. Peter Mutemi, member elected, represents the workers. And finally, we have Mr. Patrick Kimemia, who represents the retirees and is a pensioners elected. Next, I will also introduce the CEO and Trust Secretary, Mr. Josephat Muriuki, who is the one who helps us run the scheme from the employee side. Further to this year, Mr. Yaola Kizito retired as a trustee following the end of his term, and thereafter the sponsor appointed Ms. Elizabeth Jenga. Once again, Karibu Elizabeth. Her profile is now on the screen. She's currently the KenGen Acting Business Development Manager and has been working as a capital planning and PPP manager since 2014, and previously as a capital planning and strategy manager between 2009 and 2014. She holds a master's degree in business administration from the University of Nairobi, a Bachelor of Arts, Accounting and Economics from Moi University, and a postgraduate diploma in financial management. She's a certified public accountant of Kenya and currently pursuing a master's degree in public policy at Strathmore University. Ms. Jenga brings on board a vast experience in accounting, finance, audit, strategy, and project planning, which will be a valuable addition to the board's portfolio and to the oversight and the implementation of the scheme strategy. Next, I would also like to recognize the service providers present. So as I introduce them, their logos will run on the screen and they will be called out. So we should organize, first, before we go to the the scheme service providers, we wish to recognize the pension industry regulator, the RBA, who have continued to proactively promote savings for retirement in Kenya. We wish to recognize Mr. John Muli, who's the RBA's representative, could not make it. He's the actuarial officer. He's in absentia. He has not been able to attend due to unavoidable circumstances. Next, we have our fund managers who are also here, starting with Co-op Trust Investment Services representative, Mr. Nicholas Ifodeka, who's the MD and CEO, and Mr. David Oduri, who's a portfolio manager. Then I have the Britam Asset Manager, which is represented by Mr. George Junge, who's a senior portfolio manager. Also present is the scheme's custodian, Ncba Bank, represented by Ms. Eva Mwangi, head of custodial business. Let us also welcome our administrator's representative, Ms. Kanza Musyoka, who is a senior consultant from Zamara Financial Services. The external and internal auditors are here too with us. I begin with Mr. Job Ngunu, who is the manager audit for PwC, our external auditors, and Miss Josephine Karimi, who's manager from PKF for the internal auditors. Finally, also present is KPMG, the tax consultant, represented by Mr. Clive Akora, who's the director of Clive Services. To all our service providers and their representatives, you are all welcome. Thank you very much. Finally, I'd like to just recognize the Pension Secretariat staff who are present. There should be a photo displayed on the screen, and their names will be appended for ease of identification. So this is the Secretariat team that takes care of the day-to-day operations of the scheme, as it is shown on the screen. Mr. Trust Secretary, can you kindly introduce your team, please?
Thank you, Chair. I will introduce my team. This is the same team I had during the previous AGM. Seated from left to right, we have Jane Namnyak. She is the office assistant. We have Purity Kamau, the one in charge of pension. Gloria Kikete, in charge of finance. We have Hannah Ngohe, in charge of investment. We have Marianne Mudhui, in charge of administrative activities within the scheme. Studying from left to right, we have Bill Oliki, in charge of procurement. We have Peter Meano, the ICT and the host for this meeting. Francis Maina, this is the property technician. We have Rashid Kanywa, the one assisting Gloria on finance matters. We have myself, the CEO and the trust secretary. We have Albert Anam, the one assisting Peter on pension matters, and Anthony Mangeli, who is in charge of property. Thank you.
Thank you very much. I now request the trust secretary to read the notice convening the meeting.
Thanks, Chair. I'll read the notice as displayed. Notice hereby given that the annual general meeting of KenGen Staff Retirement Benefit Scheme, the DB scheme, is to be held virtually via the scheme's webinar platform on Friday, 25th September of 2020 from 9 a.m. The agenda for the meeting will be as listed below. First is to read the notice, which I'm currently doing, receive the chairman's report, to receive, consider, adopt the scheme audited financial statement for the period ended 31st December 2019, together with chairman's and auditor's report thereon. We will receive the scheme administrator's report, for the manager's report, custodian's report. We will also receive sponsor remarks. We will have the question and answer session and also the closing remarks. Thank you.
Thank you very much. We now review item number 6 of the agenda on the scheme's audited financial statements for the year ended 31st December 2019, together with the chairman's report thereon. I'll read the report now. Dear members, it is my honor to present to you the Defined Benefit Scheme's 2019 Annual Financial Report, noting it is the 20th anniversary since the fund was set up with a mandate to ensure sustainable retirement benefits to its members and beneficiaries. Members, this year's scheme's annual financial report is set to be reviewed at a time the world is facing the biggest health and economic challenge in generations. The COVID-19 pandemic, which occurred right after we closed the scheme's financial year 2019, has had significant and far-reaching global impact. The full socioeconomic impact of the pandemic is yet to be felt, but we know that these challenges require extraordinary cooperation among individuals, institutions, and the government to mitigate its effect. As a scheme, preparedness is a critical factor to ensure that the scheme's operations and service to members are not adversely affected. We have taken the necessary steps to limit the disruptions to our normal operations and as such empowered our staff to work remotely. This we have done by ensuring that all our trustees and staff are enabled to connect not only with each other, but with new members as well. While we have discouraged physical meetings, the board has been able to hold successful committee meetings virtually, including this virtual AGM, despite lack of proximity. We have also leveraged on technology to ensure that election for a pensioner trustee representative were conducted without fail in the past month. We are proud our pensioners are technology savvy, which allowed the success of the election. We have strong confidence in the 2019-2028 strategy, which is designed to keep us well positioned for both future financial disruptions and new growth opportunities. The 2019 board focus areas. The board's areas of focus in 2019 fiscal year were: first, stewardship of the long-term investment strategy. The macroeconomic environment for the year 2019 had mixed reaction. Overall, Kenya's GDP was 5.5% in 2019, which has since slowed further to 4.9% in Q1 2020, mainly due to the negative economic effect of the pandemic. Currently, the inflation has eased even further to levels below 5%, which closed at 5.82 at the end of the year. The pandemic has caused negative pressure on financial markets internationally and locally, with short-term spans of recovery as countries provide easing measures to support the economy. The real estate markets have also not been spared either, with slowed growth on property uptake or development. The scheme's disciplined investment philosophy, guided by the scheme's investment policy statement, ensures we earn above market and sustainable returns. 2. Implementation of the long-term strategy. Members, during the fiscal year 2019, the board met regularly to oversee the scheme's investments and performance, systems and structures to deliver positive financial results. The scheme's fund value closed at 7.988 billion, which was a 3% growth from Shilling 7.7 billion reported in 2018. The board is confident that management has effective processes and plans in place to ensure the continued sustainability of the fund. As part of the board's mandate, risk management is integral. We continually assess the adequacy of the scheme's governance structure to ensure effective oversight of all risk assessment and risk management activities. Albeit the pandemic, optimism continues to grow globally and locally as countries ease lockdowns and start to reopen the economy and the possible finding of a coronavirus vaccine. The current year may yield modest returns relative to year 2019's return, and our fund and property managers continue to put cautionary investment measures that allow for capital preservation at minimum risk. 3. Engagement in business activities. As part of the strategy implementation, the board has focused on 4 main oversight areas. A. Investment oversight. Key to this, the board undertook a consultative process to formalize review of the investment policy statement. A competitive review of fund managers and custodians was also conducted for a 3-year contractual engagement commencing in the year 2020. Operations oversight. To ensure the scheme is well positioned to manage through the significant financial and operational impacts of the COVID-19 pandemic. Technology. Having the right technology, systems, and processes has proven to be critical this year as we have enhanced successful transition to a work-from-home environment in response to the COVID-19 pandemic. The board approved the implementation of an enterprise resource planning to support all staff and enhance on service delivery. Finally, people. A significant and ongoing objective of the board is to strengthen our pool of talent and to sustain an optimal corporate culture. Our high-performance culture is founded on our values of integrity, innovation, and customer focus. In conclusion, though the pandemic creates an uncertain economic environment, we will continue seeking the best investment opportunities to ensure members get the best returns. Finally, on behalf of the board, I convey our sincere gratitude to all of whom are adeptly guiding the scheme through this difficult time. Their expertise, advice positions the scheme investment to weather this storm and keep on course, keeping our commitment to all our contributors and beneficiaries. I'd also like to place on record my deep appreciation to the sponsor, KenGen PLC, and to each of our trustees for their understanding and for their outstanding service. I acknowledge our CEO and Trust Secretary and his team for all their efforts. To our service providers who remain dedicated to support our mission and the security of the fund through this uncertain time, we thank you. Finally, we thank our regulator, the RBA, as they are dedicated to seeing the retirement benefit schemes on solid footing for the future. We may now receive reports from the other service providers, and I request you to switch on your cameras as you're making your presentations. At this point, I will hand over to the fund managers. I'll call upon Mr. Nicholas Ikondeka, who's a portfolio manager at Corp Trust Investment Services, to present the investment manager's report to the members. Mr. Ikondeka, over to you.
Okay. Chairman of the fund, Sir John Sitati, Board of Trustees, scheme members, good morning, and I hope everybody is well. I hope you can all hear me.
I can, thank you.
Thank you, Chairman. So members, I'll be presenting the investment report on behalf of Fund Corp Trust Investment Services and Britam asset managers who have been mandated by the Board of Trustees to manage the scheme on behalf of members. And I will talk about 2019, which is a year we are reporting, but given the circumstances of 2020, which the Chairman has ably mentioned, you'll kindly allow me to comment about the current status as we progress. So simply put, members, our role is quite simple. My agenda as displayed on the screen is just 6 agendas, our role, overview of the economy, then I'll move to fund specifics. And jumping straight through to our role, members, our primary role as a fund manager, as advised by the regulators, which is RBA, is to advise the trustees on investments. And coupled with that, we do then analyze as a regulated firm, analyze and identify securities in terms of research of markets, construction of best portfolios, review of the portfolio, evaluating performance, and meeting with trustees. As the Chairman ably mentioned, we have met with trustees more than 5 times during the year we are reporting to discuss investment performance and agree the way forward. Then there's reporting to scheme members at AGMs such as today, where we're reporting what we've done for the fund and the performance achieved, and most importantly, the strategy going forward. And of course, then coupled with that, since we all have to have a license, both with CMA and Retirement Benefits Authority, is to comply within the law and also to get trustees about the compliance role. So I'll jump through to the economics on the next slide. Again, COVID-19, as mentioned, members, is here and it's a reality. I'm happy personally to see that we're discussing it a bit late in the year because we're able to see the substantial progress since March 10th in terms of Kenyan impact. So simply flashback to 2019, we had a fantastic year in terms of performance. As you've seen the Chairman mention, we were able to see the markets return almost close to 20% on the NASI or the All Share Index, and the scheme, KenGen scheme, was not left behind in terms of performance. But jumping through to 2020, which we've been able to see the half-year numbers, especially for the Board of Trustees. If you look at the world economy due to the COVID-19 impact, there's been substantial revaluations of growth in terms of GDP, in terms of markets, in terms of almost all parameters you can think about. Of course, coupled with that is projections of IMF have been revised They moved to deeper recessions across different states and different continents. Again, for us, sub-Saharan markets, because we are mainly a growing continent, I think the first contraction in 25 years. Again, this is backed by the COVID-19 impact. But that said, as a fund manager, one of the key things we were looking at is to see if we would be able to still continue posting positive numbers. And I'm happy to report even at half-year point, we were seeing positive numbers. As Chairman mentioned, not aggressively high numbers, but positive numbers nonetheless, which we do expect to carry on to the end of 2020. So in terms of the economy, you'll see unemployment, you see displacement of workers, you see disruption in global supply chain. Again, all those are factors which drive economic growth. They also drive the companies which we're invested in. They also drive parameters which drive the growth of the economy. So as mentioned earlier, 2020 will be a slower performing year. 2019, we are happy to report the positive numbers which we have seen. But for 2020, we do expect to see substantial reduction in growth, but still a positive growth nonetheless. On the next slide, I will talk about the Kenyan parameters. Again, this is inflation factors, which is quite important for us as fund managers, because we do track the movement of this to give us direction of economy. 2020, despite the COVID-19, has been favored with good weather in terms of rainfall patterns. And of course, reduction in fuel demand across the globe has helped us as well. In 2019, we did have a stable inflation, close at about 5.28%. And again, in 2020, we've still seen a well-contained inflation. And when inflation is contained, people have more money to spend on investment income, investment of matters, which is outside basic needs. But however, in 2020, due to the COVID-19, some of those economic analogies are being tested quite aggressively. The government has come in quite strongly. I think in April 2020, they have reduced likes of VAT from 16% to 14%. Again, just to support most of the businesses and most of the households, which has worked fairly well. Again, as we progress in 2020, then we expect to see them maintaining those levels of support on the market. If you jump to the interest rate factors, which is on the next slide, you'll see the bond markets. Again, your scheme is mainly held substantially of the capital markets instruments in bond markets. In 2019, we were happy to report a reduction in yields, which saw the scheme report quite aggressively, well above 12% on the bond activity and return. In 2020, again, due to people moving back to bond activity because of running away from equity markets, given the conditions, we have seen some pickup in yields and at the initial stages, and of course a subsequent drop in yields, which again for the fund is positive news because we are able to show those bond values as positive gains. So nonetheless, the largest proportion of the fund, and this is where most of the income will come from in 2020, has been quite stable: fixed income, bond yields, treasury yields, and of course the corporate paper that you're holding, which has been able to pay quite well. So moving forward, we may see some levels of activity and the volatility on yields, especially when you consider around things like currency. Currency has moved all the way to about 108 to the US dollar. Later on in the later quarters, we expect to see some bit of protection from the CBK, which might also compromise on yields. But as your fund managers, our work is to get the trustees to navigate these cycles in the market and ensure the scheme is able to post above market returns, given the conditions that we cannot change. On the next slide, you'll see we are mainly talking about equity markets. Members, this is where the impact of COVID-19 was quickly felt. As I have mentioned, in 2019, we have seen substantial return for the scheme. If you look at the analysis of the performance for last year, the biggest growing sector was stock markets, and you see well above 20% return on that particular docket. But in 2020, with the onset of the COVID-19 and just before that, the market dropped significantly to the lowest point at some point, 21st of March 2020. But later on, you'll see how the stock market has picked up, and your fund has not been left behind. So in the last 1 year, last 1 month in 2020, in the last 2 months after close of Q2, the stock market has picked up. Again, this is after the markets adjusting a new normal. Businesses have adjusted in terms of ways of doing business. A bit of relief from the extended hours from the initial lockdown, some return to normalcy in terms of work, which means the companies are picking up. So for us as fund managers, you'll see us take aggressive opportunities. Remember, the pension scheme is a long-term investment, and for us, we are looking at extracting value significantly. So you'll see us in 2020, as we report next year, you'll see us the positions we took in 2020 in buying stocks, because we did see some very good stock. One of the biggest stocks we hold of this fund is Safaricom Counter, which had dropped all the way to levels of 20 shillings, 22 shillings in March, and subsequently has recovered to levels of 30 shillings. And for us as pension schemes, we look at those opportunities to be able to take advantage of some of those stocks we think have very good value and have positive sentiment going into the future. So in the next slide, you see in terms of fund statistics, again, this has been ably presented. So 2019, you see the fund value grew despite the fact it is what you call a locked scheme, DB fund, investment in property, government securities there, you're holding about 22% of the portfolio. Equities is just about 10%, which means that even as you've seen the stock market going through the downturn in 2020, you're only holding about 10% of that on risky or what you call equity markets, which means the impact may not be as significant as it would be on peer schemes or schemes which are a bit more liquid as compared to your fund. So we are still growing in 2019. In 2020, as the chairman mentioned, a bit of a setback in terms of the trend of growth, but we are happy to report as at half year, the scheme had hit a positive digit number in terms of performance, which means we don't expect to see a negative return in 2020, which again is good for us given the circumstances of COVID-19. In terms of income, which is the next slide, members, you see the income for 2018 was about 492 million. We are able to see about 551 million in terms of income. Again, this is now what you'd call the income from the instruments you're holding, which is dividends income, rental income, treasury bonds, commercial paper, treasury bills. And our aim as fund managers is to maximize as much as possible. And of course, given the number one objective of the fund, which the chairman mentioned, which is mainly to pay members in terms of pension and up upon their retirement. And of course, as they continue in retirement, you're able to pay them quite well. So when the funds are growing, when the income is growing, for us members, it's good news. So in 2020, as I close up in my presentation, we are happy to report again a positive number. But as the chairman mentioned, I just want to reiterate that 2020 is a year we actually look just to see the preservation of capital. So if we are able to hold the value that we had in 2019, at the end of 2019, and just a moderate growth, probably a single-digit number, for us, we feel we've done quite well given circumstances, and of course in line with what the Board of Trustees are guiding us from quarter to quarter. So on behalf of Coptrust Investment Services and Britam Asset Managers who have been in office for the year that we are reporting, our work is to say we are committed to continue enhancing value of the scheme and to ensure we are able to report numbers which are pleasing to the Board of Trustees, and of course they are above market, and we look forward to continue being of good service. And we will be available to the end of the session, as I was guided by the Trust Secretary, to answer any questions on investment performance and any other matter that may come up on the economy. Thank you so much, members, and I think it's over to you, Chairman and the Trust Secretary.
Thank you, Nicholas, for that good presentation. I am receiving some feedback that I'm not audible. So if I'm not audible, please feel free to make the comments so that you can hear me. Next, I would like to call upon Ms. Eva Mwangi from Ncba Bank to present the custodian's report to the members. Over to you, Eva.
Thank you, Chairman. Good morning, members, trustees. Thank you for the opportunity to present the custody report. My presentation will take the following format. I will give a summary of what our role is as a custodian to the fund, give a breakdown of the assets that we were holding at the end of the last financial year, and finally a confirmation. We could go to the next slide, please. So as a custodian, the first and foremost, our role is to ensure that any investment instructions that you receive from your fund managers are settled in a safe and secure manner. Should they decide to buy, if it's an investment instruction to do a purchase, our job is to ensure that the asset is correctly registered in the scheme's name. If it's a sale, the proceeds are received and credited into the fund's accounts. We also provide safekeeping of all asset classes. Examples include equities. Those are your shares in the stock exchange. Deposits, government securities. Those include your treasury bills and bonds, offshore investments, corporate bonds. And for schemes that hold property, we do keep title documents in our safekeeping. We also provide asset servicing on the investments that we have under custody. And this simply means that we ensure that all income earned on behalf of the fund is collected on time, and income includes dividends or interest. We facilitate the process of opening accounts in the markets that your fund managers wish to invest in. And these accounts are open in our nominee name, meaning that they're ring-fenced, they're not commingled with any other client assets that we are holding, and neither are they reflected in the bank's balance sheets. We do report to your trustees on a quarterly basis, and during the meeting, we go over all the transactions that have been processed during the quarter. To your administrator, we speak to them as and when there's a need. To your fund managers, we communicate on a daily basis because we have to share fund balances for them to make investment decisions. And to the regulator, we do submit our quarterly returns on behalf of the scheme. We also process payments. For members that lead the scheme, we are instructed to make any payments. We will process those instructions. We also process the pension payroll. And also, if there are any scheme expenses, we are given instructions to make those payments. To aid the trustees to ensure compliance, we receive contributions on behalf of different schemes. And finally, should there be any danger that we see to the scheme, our job is to also shout about it. Depending on the situation, we'll communicate to your fund manager, the trustees, the regulator, or the administrator. The assets that we were holding at the end of the last financial year, this is the breakdown. We were holding demand deposits. Those are your short-term deposits valued at 27.5 million shillings. We had a small cash balance there of 947,966 and 62 cents. Corporate bonds valued at 43 million shillings. Quoted equities are valued at 735.1 million. Regional equities, we had a small amount valued at 788,000. Property valued at 5 billion. Term deposits at 154.9 million shillings. T-bills valued at 67.9 million. And government bonds, treasury bonds at 1.6 billion shillings, giving a total fund value of 7,695,152,385 and 45 cents. So finally, members, I would like to give a confirmation that income earned was collected on time. All investments were executed within the laid down regulations. All investments were executed by your by the various fund manager instructions, and that your investments are safe. Thank you very much. I'll take any questions during the questions and answer sessions. Back to you, Chairman. Thank you.
All right. Thank you, Eva, for that presentation. Next, I'll call upon the scheme administrator's presentation. I'll now call upon Ms. Kanza Musyoka from Zamara to present the administrator's report to the members.
Thank you, Chair. Good morning, trustees, fellow service providers, and members. Chair, please confirm you can hear me.
Yes, I can hear you. Thank you.
Okay, great. Dear members, I can see our numbers have already hit 300, and that's such a good number, the best I have seen in any AGM. To see that we are connected in different parts of this country to attend this AGM just makes me quite glad and pleased that members have taken this keen interest. I'll go straight to the administration report, and as has been our usual format, we are required to remind members of your benefit structure. And so that's what I will tackle in this section of the DB AGM. And in the DC AGM, we will go a bit into the recent legislative changes as well as financial planning. Peter, next. So the purpose of any retirement benefit scheme is twofold. One, it allows you to save for retirement, save for the older person you shall become. And secondly, the savings that you have in the scheme will be used to provide financial relief to your dependents in the case of demise. Right, just a bit of history. I see the chair already talked about that the scheme is 20 years old this year. That's such a big achievement. The scheme has come so far. And the scheme was closed in December 2011 because of the Treasury circular that required defined benefit schemes to be closed and new defined contribution schemes to be established. So for your scheme, this happened in December 2011. Members who are above 45, who are below 45 years were required to join the DC scheme, and this happened in January 2012. And members who are below 40, who are above 45 years were given the option of either remaining in the DB scheme and you continue to save in the DB scheme, or move and join, and join the DC scheme and continue to save going forward in the DC scheme. And we can see that most of your members, the younger members, all moved to the DC scheme. A few of the DB members moved to the DC scheme, but majority of those who are above 45 years remained in the scheme. When we look at your savings in the scheme, because you're a defined benefit scheme, then it means your benefit is defined. And this benefit is defined using a formula. The formula is shown in the screen. As you can see, the formula is usually 2% times your years of service times your salary at retirement. So we simply put it 2% times pensionable service times your final pensionable salary. Now 2% is the ratio at which the scheme aims to replace your annual salary. And so for your scheme, this was the rate that was approved by the sponsor at the time of setup. Moving on to the next slide, we just look at how you can access your benefits. The formula is the same, it does not change. So we only look at the two factors that change: your pensionable salary at retirement or at the time you exit, and your years of service. So let's look at the first one. If you exit below the age of 50 years. And the reason why we say 50 years is immediately you are 50 and above, we treat you as a retirement. So any member who's below 50 years, they can access their benefits in this way. The first is that you can access your benefit as a cash benefit, but the cash benefit is restricted. The law allows that you can access 50% of your accrued benefit, and the balance of 50% is retained in the scheme until you attain retirement age. This is from the age of 50. So how do we calculate your cash benefit? We look at the higher of your accumulated contributions plus interest. These are the contributions that you made as a member and what the employer has put in. And the second element that we look at is we try to calculate your pension today. The pension that you will get at retirement, we get it a cash equivalent today. So when you're calculating your cash benefit, we look at the higher of the accumulated contributions plus interest and the actual cash equivalent of your deferred pension. So should you choose to take the cash benefit, then your benefit is computed in that way, but you also have the option of transferring your benefit to another scheme. So if you're moving to another employer who has a pension scheme, you can transfer your benefit as a whole, or you can choose not to access your benefit and leave it in the scheme. And that means that you defer it in the scheme until your retirement age. So let's look at the other way that you can access your benefit. This is at retirement. Again, this is anyone who lives after the age of 50. Because the scheme is a pension, then we will pay you your pension, but you have the option of taking a portion as a lump sum. So you can take up to 1/3 as a lump sum, and the 2/3 that remains must be paid out as an annuity, or also known as a pension. Basically, a pension is that monthly payment that will be paid to you, similar to your salary today, that is paid to you at retirement. Now, should you choose to leave early, let's say you want to leave at the age of 52, then because you're accessing your benefit earlier, and this pension will be paid for longer, then your pension is actually reduced, meaning that we have to factor in that your benefit will be, we assume that your benefit will be paid for longer. So let's look at death in service. If a member passes on when they're still working for KenGen, there's a pension that is payable to the spouse and children, and this means that we calculate the pension that would have been payable to the member, and the spouse receives 50% of that pension, and children, each child receives 12.5% of the pension that the main member would have received, payable up to the age of 21 years, and the number of children that can be paid is a maximum of 4 children. In addition, the scheme has an insured benefit that is 3 times your annual salary, which is paid out as a lump sum. But it's important to know that this is only payable for those who pass on while still in service. In the case of death in retirement, what is payable is a pension that is payable to the spouse and children, as I've explained. But in case a member passes on and the guarantee period of 10 years has not lapsed, then there is a one-off lump sum that is payable based on the residual pension that is payable to the family. So death in retirement, a pension is payable to the spouse and children, as I've explained. And in addition, if the member passes on within 10 years from the date that they retired, then there's a residual pension, and this residual pension is payable as a lump sum. So members, that brings me to the end of the slides on the benefits. Because we still have the DC scheme ahead, as I said, there are 2 items that I will be covering in that section, and I would urge all members to remain for that presentation. Thank you, Chair.
Thank you, Kanza, for the presentation. At this point, I'll ask the Trust Secretary to kindly share the second poll.
Thank you, Chair. Good morning, members. Host, please share the next poll. The next poll is just culminating from what we have discussed from the Zamala, is how well do you understand your annual benefit statement? This is the statement that you received in June, the one that shows your benefits and what your retirement package. Just select one answer and post it. It will only take 30 seconds, then we'll post the results. We'll give only 30 seconds, 15 seconds remaining. I will encourage members to do this. This will also be able to guide us as we do the member education and know where to put more effort on. I think we have now 8 seconds remaining as we be able to finalize this. And I now request the host to post the results. Chair, as you can see there, we still have a number of members who don't well understand the statement very well, 13%. Well, we have 44%. Fairly, we have 38%. Not at all we have. So we have a lot of work to do as we do the member education, and we'll be able to do that religiously. Thank you, Chair.
Thank you very much for that. I will now call upon Mr. Job Ngunu from PwC to present the auditor's report to the members. Over to you, Job.
Okay, thank you, Mr. Chairman. Please confirm if you can hear me.
Yes, I can, Job. Thank you very much.
Okay, so the Chairman, the Board of Trustees, the members and the panelists, good morning. Before I jump into the opinion, I'd just like to mention 1 or 2 things. The first thing is just PwC being PricewaterhouseCoopers was appointed for the first time for the audit for the year ended 31st of December 2020. And again, our role, as I've mentioned, is to audit the financial statements and of course the underlying records supporting the financial statements. Mr. Chair, with your permission, I'd like to take the financial statements as circularized. And therefore, on that basis, I will not read the whole auditor's report. I will just read our opinion section of the report.
This is in order, Job. Thank you.
Okay. I would like to read out the opinion. Probably we can move to the opinion. So we have audited the financial statements of KenGen Staff Retirement Benefit Scheme, specifically the defined benefit scheme, which is set out on pages 13 to 41 of the financial statements. This comprises statement of net assets available for benefits at 31st December 2019, and the statements of changes in net assets available for benefits and statement of cash flows for the year then ended, and the notes to the financial statements, which include a summary of significant accounting policies. In our opinion, the financial statements give a true and fair view of the financial position of KenGen Staff Retirement Benefit Scheme at 31st of December 2019 and of its financial performance and cash flows for the year then ended in accordance with international financial reporting standards and the requirements of the Retirement Benefits Act. Again, just like if you can move the next slide, I'd just like to make specific reference to the financial statements. You will find the full auditor's report on pages 10 to 12 of the signed financial statements. Mr. Chairman, back to you.
Thank you, Mr. Ngunu, for that report. I now propose that the annual report and financial statements for the year ended 31st December 2019 be taken as read. At this point, I now wish to take you through the following minimum agenda items. During the year, the meetings held for the full board and committees were as follows. The full board had 5 meetings. The Administration and Communication Committee had 5 meetings. Audit and Risk Committee had 5 meetings, and Investment and Strategy Committee had 8 meetings. The trustees' remuneration is as disclosed in the financial report. Currently, the scheme pays trustees a net of Kenya shillings 28,000 to the board chair and Kenya shillings 24,500 for board members as sitting allowances. In the board's continued efforts to prudently manage scheme investments, expenses, and give a better return to the members, the board has no proposal to change its members' remuneration in this financial year. I would also like to confirm that there were no changes in the benefits and contribution structure in the year 2019. At this point, I would like to call upon Mrs. Rebecca Miano, who is the KenGen MD and CEO, to deliver the sponsor's remarks to the members. Over to you, Rebecca.
Thank you very much, Chairman, for this opportunity. And I want to say a good morning to all the participants today who I see stand at 339. Having said good morning, first and foremost, receive my heartfelt greetings. I am truly delighted that we can meet today, albeit through this platform that is virtual. And my dear friends, never before have we witnessed the world change as much as we have done this year of 2020. And as you are all aware by now, our world has been altered completely by the COVID-19 pandemic, with businesses around the world counting their losses, many being shut down altogether. And this meeting comes at one of our most trying moments in KenGen's history. Yet, nevertheless, we have much to be thankful for as a company. And the first is that we have been able to keep our turbines running, delivering on our mandate, particularly at this time when we were reminded of our role of being an essential service provider in this country. Thanks to the work we are doing together, our lights cannot go off, not now. The industries producing personal protective equipment need the energy to keep running. Our hospitals, including the intensive care units, need electricity too. We understand all this too well and undertake our work diligently. There is no other time that electricity is much more needed than this period, even for people working from home. In the last scheme AGM, KenGen geared itself to the completion of 172 Olkaria 5 power plants. We were delighted to receive news earlier in the year that Kenya's geothermal installed capacity of 720 was ranked number 7 in the world among the top geothermal producers. The silver lining continues to shine. Our diversification strategy remains robust. even during the pandemic. Our teams set out to support key projects on geothermal drilling and consultancy contracts in Ethiopia, thus enabling the company to increase its revenue. And in the year to come, we will also be moving to Djibouti. KenGen's wins were secured because of dedication, hard work, and commitment from you, our employees. As our business is on a growth trajectory, so is our workforce. In the calendar year 2019, we engaged 341 staff on permanent and pensionable terms. My call to you is to continue living up to our corporate theme, where we continue to build, we continue to bring out our best and be present. And this we want to do with excellence. The company remains committed to ensure its employees prosper on the job. We fully fund the DB scheme and remit contributions to both schemes in a timely manner. Last year, 78 and 69 staff drew retirement benefits from the DB and the DC schemes, respectively, which will go a long way in ensuring that our staff retire comfortably. The sponsor applauds the Board of Trustees of the benefit scheme for enabling change to hold this virtual AGM. A couple of years ago, an online forum would not have even crossed our minds. The sponsor notes the trustees would have opted to wait for the situation to normalize, but for embracing this innovation, it's business as usual for the scheme and nothing has stopped. We do also take cognizance that trustees have ensured continued smooth operations during the pandemic, enabling our staff and stakeholders access to uninterrupted services. The Board of Trustees is proud to introduce the appointment of the sponsor-nominated trustee, Ms. Elizabeth Jenga. I believe she will harness the skills framework of the team. Elizabeth, you exude strength and commitment at what you do, and we believe you will do the same here at the DB scheme. And finally, members, there is a pool of knowledge passed on to us through the scheme's Secretariat in collaboration with the company's human resource offices. Aspire to learn from them, and let us then close the gap that we have seen in the poll today. It is your duty and your right to understand your scheme fully, and we do hope that next year when we take the poll, it will be 100% of those who fully understand their schemes. Like I have said in the past, retirement benefits are personal, and it is your personal effort to understand your scheme. Thank you very much, everybody, and I urge you to keep safe in these precarious times. Thank you very much, and back to you, Chairman.
Okay, thank you, Mrs. Miano, for that speech, very well spoken. At this point, we will now respond to the questions received on Q&A. You keep them coming and we will keep tackling them. So I would now like to request the Trust Secretary to moderate the Q&A session. Thank you.
Thank you, Chair. I would guide we go as follows. We had received a number of questions in advance. Some of them came through the email we provided, that is agm@kengen.slbs.co.ke, and I'll read them as they came. One of them came from Kalmas Ogola, a pensioner who asked why pensions are not issued with payslip. The next one came from Lillian Awo, a member who asked why the scheme is paying retiring and members leaving the service before they clear their loans with the Stima Circle. The next one came from Jeremiah Mulango, a member who asked the following question: benefits in the B scheme are calculated as guided by, this is a question on how the benefits are calculated and why we use the thus 3-year salary. The next question came from Augusta Nyaloso, who was asking for the clarification on how the 3% increment is calculated, as he doesn't be able to see the big impact on his payslip at the beginning of every year. We had also received a question from Juma, that Patrick Juma, a pensioner, who had requested to be clarified on how to join the meeting. Additional to that, we have received also a question from Michael Okello, and I read as it is. I have this one question beforehand. Do you have a product for securing mortgage with the pension fund? How flexible is KenGen RBS on this? I know the pension practitioners have previously brainstormed in this idea. Are there any laws and framework policy towards this? We will be able also to answer the same. And also the other question came from Lison Bujila, a pensioner, who asked about the provident benefits and when we are paying them. And the last one came from Charles Anyenga, a member, who asked about if we have any framework or setting up of the post-retirement medical. So I would request we first handle those questions, then we also handle questions, and where members will be able to raise hand and ask the question live on the platform. Thank you, Chair.
All right, so I will then direct back to you because I believe your team has prepared the answers. So you can then help us by taking us through them, and anywhere we need to enhance, you will let us know.
Okay, thank you, Chair. The question from Kalmas Ogola, a pensioner, we would wish, the one who would wish to be receiving payslip every month, would wish to confirm that we are currently implementing an ELP for the scheme, and by the early next year, we should be able to issue payroll payslip to members every month, and that's a promise we are making, and we'll be able to fulfill it. The next one from Lydian Wo. Unfortunately, the LRBA laws does not allow us to utilize members' money to pay off the loans. They are not allowed to assign benefits to such loans, and we request members to engage the people they guarantee to loans and ensure that they are able to overcome such scenarios. The next one is about Augusta Nyaloso. Yes, we do give pension increment every year. That is for Kenya Power Service, and it happens every year at the beginning of every year, and we usually communicate to members on the pension increment to them every year. And I wish to confirm that the next one will be coming in January 2021. And in case of any more clarification, we can be able to answer that. For Patrick, you are able to. On Michael or Kello, for Michael, it's about the securing mortgage. I would wish to confirm that last week, that is 14th of September, the Cabinet Secretary in charge of Treasury signed a retirement benefit mortgage amendment regulation. This confirmed that there is now a law in place, and the same is also in the business day today, that the board should be able to amend the trust deed to allow members to access 40% of their benefits and utilize it to purchase a residential home, and a maximum of 7 million. This happens once. We'll be able to guide members and do education toward the same, and guide you exactly on when to make such decision. On the one for Wilson Bujila on Provident Fund, yes, Provident Fund, these were for members who joined the scheme a while back, that is before 1983, and members who were earning below 2,500. The scheme had gone through liquidation. The liquidator was Ernest Young, and the process has not been finalized. The account have not been filed with the RBA and approved. We are looking forward to be able to pay members from the mid of next month. All pensioners will be paid directly to their account, and also from the member who are active, the funds will be sent to the scheme and they will be paid at the time of leaving. For Charles Anyenga, post-retirement medical, yes, we have been thinking of it. We have done a number of research benchmarking. We are looking forward to be able to set up a post-retirement medical with also consultation with the sponsor, and ensure that we'll be able to give members a good medical cover in retirement. Currently, we have also some option for members. We have a medical scheme for members from First Assurance and also from UAP, and you can be assured that we are taking care of our members in retirement. For Juma, we were able to guide Juma on his retirement and how to join the meeting. Thank you, Chair. We still have some questions coming through the Q&A, and we can handle them as they come. Chair.
Right, Josephat, thank you very much for that. Again, looking at the Q&A, I just want to see what other question has come. So from Isigenyi, okay, wait, I think the new one. Jennifer Doe is the first one. We notice that the property portfolio stands at 65%, while the RBA limit is 30%. Does this mean that the scheme needs to offload some of the property? The answer to that is yes, we need to. The challenge we are facing is we already had this property in place before, but I'll actually ask the TS to talk more about this.
Thank you, Chair. We are in a process of reducing our property portfolio and looking forward. Some of the property indicated there at 65 is property for sale, and we are aggressively marketing to reduce that property portfolio. As Jennifer asked, yes, we have also filed a remedial plan with the RBA on how we are looking forward to reduce the property portfolio to below 30%, taking consideration that there's a closed scheme. So even 30% will not be appropriate, but below 30% because of liquidity. Thank you, Chair.
Right, thank you very much. Next, I'd like to answer the question from Isigenyi Isa. Tell us of the pensions for those who immigrated from KPLC to KenGen.
Thanks, Chair. The pension that was migrated from Kenyan Power for the members who migrated from Kenyan Power to KenGen, all those benefits were migrated to this KenGen scheme. And when these members will be leaving the scheme, they'll be paid together with the benefits under KenGen. So the benefits are within the scheme. They will be calculated under the rules of Kenya Power scheme then, but they will be paid through the KenGen retirement scheme. Thank you.
Right, thank you very much, Mr. TS. Next question is from Mary Mudhuri. New RBA regulations 2020 allow access of funds for purposes of mortgage or building of an own home to support the Big Four plan. Kindly tell us how those in service can access without having to retire early. I think we have already answered this question. Maybe next question will be from Onesmus Odhiambo. When I retired, I had requested that my contributions be sent to my new provider, but it was not possible. I see you have Britam as well, our partners. Why can't it be possible to transfer our benefits to our new provider, especially when we are still working? Maybe Mr. TS, you can take that.
Chair, I think it would be best to handle this with the member because it might be an issue of the benefits transfer in retirement. And we'll be able to get more clarification on this question from him, but we'll be able to handle it after the meeting.
That is fine. Thank you very much. Next, I have a question. How can I get presentation given on percentage of benefits given out at various stages, e.g. retiring at below 50 and above 50, death, etc.? This is from Nicholas Marita.
Chair, this is also an issue about projection of benefits, and I think as it had been requested previously by another two members through the email that we were able to connect to them, we'll be able to connect to this member and give him a projection of his benefits before retirement, after retirement, and in case of unfortunate circumstances of death.
Okay, we have a question from Rose Mavenge. Kindly elaborate on how one can move funds held in another scheme to the KenGen scheme. I think this should also be taken up directly with the member. Next from Mary Muthui, the property market is a bit down. Would it be prudent to offload? Maybe analyze new methods of letting money out of the property, Airbnb. Hello, Mary. This is something that we are constantly working on. So the property issue will be with us for a while. the RBA is actually supporting us on this. They're aware we cannot offload, especially because of the deprived market, the depreciating market. We are therefore working on how best we can liquidate. I've got a comment from Faith, just to appreciate Josephat and the team for the good work they are doing. Keep it up.
Thank you.
And then Mora Ogari, the presenter mentioned the threshold of up to 21 years to receive 12.5% benefit in case of death. What about those above 21? Mr. TS, maybe you can pick that quickly.
Thank you, Chair. The widow will continue receiving the pension for life, but for children who are above the age of 21, the pension is not receivable. They receive pension up to the age of 21, and thereafter the pension ceases.
Thank you. Jen Juguna, on KPLC benefits, as you have responded, does it mean we do not have to follow up on them for those of us in KenGen? Mr. TS?
Yes, I can confirm that affirmatively. You don't have to go back to Kenya Power.
I think you need to speak louder.
Chair, I would wish to confirm that you don't have to go back to Kenya Power. The benefits are within the scheme, and that will also be guided during that time of retirement.
Okay, there's also a question from Wilkista Nyangweso, which is a repeat about the transfer of benefits from a different scheme to the KenGen scheme. So I think that should be taken offline with Wilkista. Then Tarsisius Gitwa, since my money that I am paid on a monthly as pension is still with the scheme, does it earn any interest like the bank, and when do I get the interest paid? Bwana TS?
Chair, the contribution within the scheme are accrued in the scheme every year, and the interest under the scheme is accrued in the members' benefit. The benefit is not accessible to members as dividend as compared to SACCO, but accrued on their member benefits added together with their contribution. And this benefit is accessible upon retirement or withdrawal. So this benefits the return, the money, yes, the money earns return, which is credited to their statement, and which is this statement issued every year. Thank you, Chair.
Okay, I do not seem to have any more questions. So at this point, I'd like to close the question and answer session. I now beg to move that the Chairman's Annual General Meeting report for the year ended 31st December 2019 be adopted. May I please have a proposal?
Thank you, Chair. We have a number of people who have raised their hands. I would request the host to unmute them, and we have Margaret Kinya who have raised their hands. We have Margaret Bohe. Host, please unmute them. Margaret, you can talk to propose.
I propose.
Okay.
Thank you. May I please have a seconder?
We have James Getonga who have raised their hands. Or we have Amos. Amos, you have been unmuted. We have James. James, you have been unmuted.
Good morning. I second.
Thank you, James Gitonga, for seconding. I want to thank each one of you for your invaluable support to the scheme in your different capacities. At this point, I'd like to ask the Trust Secretary to kindly share the third poll.
Thank you, Chair. I request the host to raise the question. Host, please. So the next question is just about member education, and this is for the attendees. Have you ever attended member education forum or visited the Secretariat office to inquire about your retirement benefits? You can either say yes, no, not sure, or never. We give 30 seconds for the poll. Have you ever attended member education forum or visited Secretariat office to inquire about your retirement benefits? Either yes.
You have a slight echo, Bwana TS.
sorry. Have you ever attended a member education forum or visited the Secretariat office to inquire about your retirement benefits? Either yes, no, not sure, or never. We have 10 seconds remaining. We'd also look forward to get results for this poll so that we also can be able to know how to be able to display, to give information to members and also educate members about the retirement benefits. Host, you can now display the results. Chair, yes, we have 88%, 49% of the members have visited the office or even attended a member education. No, we have 43%. We need a lot, there's a lot of work there. Not sure, 5, and never 10. So this is a good poll. We still confirm that we have a lot to do. So educate members about the retirement benefits. Thank you, Chair.
Sorry, I was muted. Sorry. Thank you very much. I'm a bit concerned about the not sure answer. So I think, yes, there is a bit of work you need to do there. So finally, in conclusion, dear members, even as the restrictions are gradually being lifted, I continue to urge you to adhere to the Ministry of Health and government directives. Take care of your mental and physical health by engaging in physical activities that will help you stay fit both physically and mentally. Eat a balanced diet with a lot of vitamin C, as this will boost your immunity and guard your body against diseases. There being no other business on which due notice has been given, may I take this opportunity to thank you all once again for attending the meeting. I would now like to urge you to remain connected as the Defined Contribution Scheme AGM will commence shortly. I now declare the DB scheme meeting officially closed. At this point, may I now request the Trust Secretary, may I now request the DB Chairman to take over? DC Chairman to take over.
Chair,
Thank you. Thank you very much. Maybe it's just proper to close the DB meeting with a word of prayer, Chair, if you don't mind.
Apologies for that. I will then like to ask Bonatias, can you guide me on a volunteer for the word of prayer to close the DB meeting?
We have a volunteer for the prayer and the host mute them. Host, please. You can unmute Purity. She can play for us.
Thank you.
Purity.
Let us bow down for our word of prayer. Thank you, God, for your goodness and your mercies. We prayed in the beginning that you are going to guide our board of trustees, you are going to guide our members, you are going to guide our service providers. We take this opportunity to uplift your name. Thank you for what you have done. As we transit to the DC scheme, may you be with us. In Jesus' name, amen.
Amen. Thank you very much, Purity, and thank you all for a good meeting. Over to you, Ernest.
Yeah, thank you. Thank you, Chair. There is a request. We go for a health break, or maybe the time now is 10:22, so that if we can start exactly at 10:30. So members, you are free to go for a health break. At exactly 10:30, we'll start the DC meeting, AGM. Thank you.
Right, thank you.
Yeah.
Unatoa service providers. Thank you.
And now you can see me. Let me now put.
Yes, sir.
Yeah?
Nice, then open then, sir.
Are you seeing? Can you hear me? But you can't see me. You can't see me. Hello? Can you? Yeah, that's where the problem is. No? I'll have to read it. No. How do you manage this situation?
We are starting.
Okay. We are starting. Yeah, good morning, everybody. I'm honored to welcome you to our first virtual KenGen Defined Contribution Scheme DC Annual General Meeting for the year ended 31st December 2019. It is unprecedented because it's the first time we're having such a meeting. I'll going straight away to the next agenda item. May I now ask the Trust Secretary to advise the meeting, the AGM, whether we have realized the requisite quorum for us to proceed on. Trust Secretary.
Thank you, Chair. I hereby confirm that we have 350 members and the quorum is hereby formed and the meeting can proceed.
Okay, thank you, Trust Secretary. A quorum being formed, I now declare the meeting to be properly convened and duly constituted. Now, members, will have to abide by the rules of the meeting, and this is how it will be. We shall run the polls just like the way we did in the previous AGM. For those who are in the DB AGM, we shall run the polls during the webinar and request for your participation, full participation, please. In addition, we have reserved a session upon receiving all presentations of the day for members to ask questions you will need to virtually either raise your hand or even give out your comments. There is a chat answer the question provision up. However, to enable us to tackle all the questions, we request you write your question in advance of the Q&A platform, and these will be responded to by any of our panelists. So maybe we can start straight away with the first poll. Trust Secretary, can you share the first poll for the members to participate?
Chair, I request the host to project the question. This question is towards the agenda by the scheme to develop residential houses for members. And the question is asking members the preferred purchase price for a residential house, either a house of 3 to 5 million, 5 to 7 million, 7 to 10 million, or over 10 million. This is for a residential house. Just for attendees, just to answer the question, we have 30 seconds to do that. If the scheme was to develop residential houses, which of the below values best describe your preferred purchase price? 1, 3 to 5 million, 2, 5 to 7 million, 3, 7 to 10 million, over 10 million. We have 10 seconds remaining, and this will also guide the board as they go towards the strategy of implementing and ensuring that members also have a retirement home as they retire. I hereby now request the host to display the results. Share as shown there from members 3 to 5 million. That's the 50% of our members would prefer a house of that value. 5 to 7 million, that is 28%. 7 to 10 million, 11%, and over 10 million, 3%. This guides us also on our strategy as towards ensuring that members have a retirement home. Thank you, Chair. We can proceed.
Yeah, thank you. Thank you very much, Trust Secretary. That's a good response. Now we move to the next phase of the AGM, and that is introduction of board members, the CEO and Trust Secretary. Members, our board demonstrates broader diversity of important backgrounds and experience, all contributing to the complex work of the board. Their detailed profiles can be found in the online copy of the annual financial report. I will introduce them as their pictures run on the scheme. Okay, members, we have our own, the MD and CEO, who is also a trustee, representing the sponsor, that is Trustee Rebecca Miano. Next is also one of us, is a director of the sponsors board, that is Dr. Trustee Musa Arusei. Next is also one of our own, Trustee Habram Sarem, who also doubles up as the Human Resource and Administration Director of our sponsor company, KenGen. Next is Trustee Paul Ndungi, who is also the company Secretary and Legal Affairs Director of KenGen. Next is my colleague, Trustee Peter Mutemi, who is currently a senior lab foreman too at KenGen PLC. At the same time, he's the National Treasurer of Getao. Then we have our own again, Trustee Joan Chaenza, who is also serving the sponsor at the level of a Chief Financial Analyst and Technical Assistant to the Corporate and Regulatory Services. Next is Madam Trustee Muli Maluki. She's at Supply Chains, is the Chief Supply Chains Officer with the sponsor company KenGen. Then we have our Trust Secretary, that is the CEO and Trust Secretary, Josephat Murioki. I don't need to explain further on him, you guys, you know him. And that is it. Yeah, so with that introduction, just a moment. The next phase also is I would love to introduce members, the service providers, and I wish to recognize the pension industry. I'll start with the pension industry regulator, that is RBA, who have continued to proactively promote savings for the retirement in Kenya. RBA's representative, who is the one who is attached to a scheme, John Mully, who is also an actuarial officer by profession, was not able to attend due to unavoidable circumstances and conveys his sincere apologies. On fund managers, we have Old Mutual Investment Group represented by Peter Anderson, and is also the group MD. Asset management under ICL Lion, we have Einstein Kianda, who is also the CEO. And we also have Barak Obatsa, and who is the chief CIO, and Esther Mchai, the senior portfolio manager. I think they should be in the house or they'll be joining us, but with Einstein there, I think the group ICA is fully represented. Now we will go to Custodian. We have Madam Lydia Mishiri representing CoBank, who are our custodians. Then we have the scheme administrator, Zamara, and is well represented by Madam Kanza Msioka. And then we have our external auditors, that is Deloitte and Touch, and they are represented here by Teresa Bashira. We also have our internal auditors, PKF, represented by Josephine Kerimi. And then our tax, the tax consultant, maybe, this is already done. Otherwise, all the service providers, I want to thank you very much for turning up. It is now the turn to also for the Trust Secretary to introduce his staff, but I think this was already done, so we don't need to repeat this. Now, I call upon the Trust Secretary to read the notice convening this particular AGM 2020.
Thank you, Chair. I'll read the notice as displayed. Notice hereby given that the annual general meeting for KenGen Defined Contribution Scheme of 2012 is to be held virtually via scheme webinar platform on today, Friday, 25th September 2020 from 10 a.m. The agenda for the meeting as shown there, notice to convene the meeting, what I am currently doing, receive chairman's report, to receive and consider and adopt schemes audited financial statement for the period ended 31st December 2019, together with chairman's and auditor's report there, receive administrator's report, to receive fund manager's report, to receive custodian report, to receive sponsor remarks, question and answer session, and also closing remarks. Thank you, Chair.
Yeah, thank you. Thank you very much, Trust Secretary. We now move to the review of item number 6 of the agenda on the scheme's audit and financial statement for the year ended 31st December 2019, together with my report. I'll start with my report. Dear members, I'm pleased to report to you on the DC scheme's significant work and development over this past year. While the scheme's focus is firmly set on long term, we are sometimes hit by short-term events impacting global markets and investors. The outbreak of COVID-19 pandemic has yielded economic consequences from the unprecedented global suspension of activity across many sectors of commerce and education, with the necessary imposition of social distancing. As a scheme, we have adjusted well with both our board members and secretariat staff, carrying out most of the operations virtually. This has not only been enlightening, but also enhanced our efficiencies. Our strong principle culture, our members' purpose, and best-in-class governance framework provided a constant ensuring the funds remain sustainable over the long term. I'm pleased to report DB scheme's results for the past fiscal year continue to demonstrate this. The fund ending the year with a whopping 6.48 billion in net assets. Long-term investment strategy of the scheme. Members, since inception in 2012, which is now, you're talking of 8 good years, the DC scheme has steadily evolved its investment strategy. The growth of our investment activities included adoption of new strategies, geographics, and structures which enable us to move from a preserve of only venturing in traditional instruments, but also making alternative investments. The board continues to implement strategies that acknowledge the importance of leveraging our comparative advantages and the power of technology to position the scheme's management to better drive strategic directions and achieve operational excellence. The ongoing market's uncertainty caused by the pandemic also exhibits solid prospects for our long-term investors, such as a scheme, to find discounted prices on investment opportunities. This then positions the scheme to reap gains on market's recovery on the mid to long-term horizon. Members, our scheme business activities. Well, as a scheme implements the 2019-2028 strategic direction, the board is focused on encouraging members to make additional voluntary contribution, and I repeat this, to make additional voluntary contribution to grow the scheme faster and larger, to provide more opportunities for bigger investment, which eventually will increase individual saving at retirement. You do this, when you retire, you reap the benefits, and you remember what the chair is telling you. As a board, we continually benchmark ourselves to ensure we are doing well. We are doing all we can for the benefit of the fund by remaining agile and proactive. This ensures our ability to provide effective governance and oversight through the period's dynamic change and complexity. A key component of good governance is ensuring that the organization pays proper heed to new and emerging risks. Recognizing this, the board engaged an internal auditor to regularly review the scheme's business activities, including providing regular updates about the scheme trends. The board remains accountable through a multitude of activities, including our robust and timely disclosure of financial reports. In addition, we host biannual meetings at which members communicate and can ask questions on a broad array of interests. Members, on board continuity, we are proactively seeking to extend the board's capabilities in providing strong oversight appropriate to its mandate, the fund size trajectory, broader investment risks, and complexity and alternative opportunities. In the last year, there was no board membership changes. Appreciation. I would like to thank first and foremost the sponsor, heavily represented here by Director Aruse and our able CEO, Madam Rebecca, that is KenGen, for their unwavering support through their regular remittance of contribution and for offering expertise on the board. I thank my fellow trustees for their commitment, for committed service, and as a board, we applaud and celebrate the extraordinary efforts of all our Secretariat staff. In addition, we extend our special gratitude to all our investment managers who are well represented here for their skilled and tireless contribution towards the realization of a base income on which you, our members and beneficiaries, will depend for your retirement, and not forgetting all other service providers. And lastly, but not the least, our regulator, RBA, who all contribute immensely to the growth of the scheme. We appreciate you all for the great work. Thank you very much. Now it is a turn to receive reports from our service providers. And I'll request those service providers who are doing the presentation to switch on their camera so that the members are able to see you properly. We'll start now with Peter Anderson, who is representing Old Mutual. Peter, ball is yours now. You can do the presentation. Welcome, Peter.
Good morning, Chairman. Good morning, trustees. Good morning, members, Trust Secretary. I wish you all well and a happy Friday. My name is Peter Anderson. As the Chairman has mentioned, I am the Group Managing Director for Asset Management at UAP Old Mutual and Principal Officer for Old Mutual Investment Group, one of the fund managers on the Defined Contribution Scheme. I'm going to be giving you a short, brief presentation covering the performance of 2019 and a little bit of the outlook. This performance and presentation is on behalf of both fund managers for 2019, which was African Alliance and Old Mutual Investment Group. Just firstly, moving on to the next slide. The first slide will cover the role of the fund manager. And if we move to the next slide. So we are appointed by the Board of Trustees, and the primary function of the fund manager is to advise the trustees on the investments. Our role can be summarized fairly succinctly as analyzing and identifying opportunities to invest in, determining the best portfolio of those opportunities for the current existing market environment, constantly reviewing the portfolio to ensure it's appropriate for the environment at the current time and ahead, reporting on the performance and providing updates to the trustees on a quarterly basis. We meet the trustees on a quarterly basis at the investment committee and at the main board, as well as having monthly interactions with the administration team headed by the trust secretary. We provide the trustees and the management and other service providers with any other information to ensure the overall running of the scheme is done in a smooth basis. And we also report to the members at the annual general meeting and are available at the call of the trust secretary to assist in any educational seminars and the like. Moving on to the next slide. Just want to talk about the macroeconomic environment for 2019. Economic growth in Kenya was a steady 5.4%, slightly lower than 2018 at 6.3%. We had a little bit of pressure in the agricultural sector, as well as some reduced government spending as they realigned some of their priorities. Inflation has been fairly well contained, particularly in 2019 and previous years, at roughly 5.7% in December 2018, barely changing in December 2019 at 5.82%. And most of this is generally driven by food and fuel inflation, which you know are some of the key components of impacting inflation in the country. In the bond market, the yield curve shifted lower across the yield curve, and this is generally driven by the fact that there was great demand for bonds driven by fund managers as well as the banking sector community. Moving on to the next slide. Here we will just touch upon regarding the Kenya shilling. The shilling exhibited fairly a sideways movement in the year, mainly just due to changing demand from importers, as well as the continuing strong diaspora remittances from countries like the United States and as well as the European Union. The shilling strengthened marginally during the year by 0.5%. The stock market last year in 2019 was up 18.5%, looking at the Nairobi All Share Index. And this we largely attribute to the late year aspect, whereby the interest rate cap was repealed in October, which then led to a tremendous rally in the banking sector stocks, particularly in the months of October towards the latter in the year. Offshore markets rebounded from 2018 lows, largely driven by a change in circumstances in the global economy and more positive talks at that time between China and USA regarding the trade and tariff little spat that they were having. Moving on to the next slide. This slide just shows you the asset allocation of the Defined Contribution Fund and how the investments are split up across the various asset classes. You will note the fund is roughly 6.4 billion and comprises in the large parts of government securities, around 68% of the fund, The second largest component is the quoted equity investments at around 18%. We have limits guided by RBA, which you can note there on the final column, the maximum allowable limits. And these are some of the presentations that will report back to the trustees on a quarterly basis. Moving on to the next slide. So we're in a pretty unprecedented year, 2020. And of course, a lot of this has been driven by the impact of COVID-19 on the global economy, as well as the Kenyan economy, and as well as the investments that we allocate the scheme's funds to. Of course, COVID came to Kenya in early March. And I would say at this current time, we have done remarkably well in handling this compared to a significant part of the world. And this is a tribute to the people, the government, and all of us in this role that we have played. However, GDP will be impacted this year, reducing probably to around 2.5% for this year by the impacts of obviously some of the lockdown, contributing to a slowdown in economic growth. Thankfully, agriculture, which is a key contributor to economic growth, has been very supportive, and where many countries in 2020 will see negative GDP growth, in East Africa will be one of the key areas and one of the lone areas that will see positive growth in this year. We hope there will be no re-escalation of COVID cases. We appear to be over the peak in terms of active cases, which are trending downwards, and we hope that we continue to do our part to suppress this pandemic. Inflation has remained fairly contained between 2.5% to 7.5%. Currently, it's around 4.4%. And the risks mainly have been around global oil prices, as well as the impact on petrol prices locally. Bond yields, that's the yield, the return that we earn from the bond investments, have been relatively stable. As you can imagine, in this current time, bonds are regarded as a bit of a safe haven. So whereas banks may sometimes be lending a lot more, in this current time, they're also buying bonds from the government, as well as the demand that's coming from insurance companies and fund managers like ourselves. The shilling, though, this year has depreciated. And a little part that is due to, at times of crisis, the dollar is seen as a little bit of a safe haven. And also we've had some of the impact in some of our import and export flows, largely driven by the aspects of the globe dynamics and changing an ability to be able to export to certain countries. That is my last comment, and I'll revert back to the chairman.
Thank you. Thank you very much, Anderson, for that very good presentation. I now call upon a custodian from Bank, that is Madam Lydia, to do a presentation on the same. Lydia, welcome.
Thank you, Chair, Mr. Nadome. Board of Trustees, good morning, everyone, Trust Secretary and members. My name is Lydia Mushiri. I'm the head of custody at Cooperative Bank, and it is my pleasure to present to you the report of the custodian. Our report will cover a refresher for members on what is the role of a custodian, how we do the report, the assets that are currently under.
Lydia,
yes?
Lydia, you seem to be in a dark place. I don't know whether Kenya have cut power.
No.
Yeah, now I can see you.
Is that better?
Yeah, now you're okay.
Yes.
Yeah, you're better now.
Wonderful.
Yeah.
Yes. So
okay, continue.
Going into the presentation, go on to the custodian role, Peter. Yes. So I'll refresh members on what it is that the custodian does as we hold the assets for your scheme. We hold in safekeeping, that is in the CDS accounts, both at Central Bank and at CDSC, the accounts that hold your bonds, stocks, and even the current accounts that hold your cash. We also arrange for settlements of purchases and sales. That's when the fund manager decides to buy the shares or the bonds. We move the money and make sure that in return, as we move the money, the assets are credited into those CDS accounts that I have spoken about. We also collect the incomes that are due to the scheme. That's the dividends, the coupons, and any income that is due. We also do payments, and how we do this is we transfer the money that the trustees request when members exit the scheme, and we also transfer funds to pay taxes and any other thing that is required. So we are the banker for the scheme. In terms of how the work flows,
is that, say, on day one, you'd have the contributions coming in, and you'll recall your CEO is commented on the contributions, and these contributions are sent very much on time. So we get the contributions, we share with the fund manager the balances in your account every single morning, and then they're able to make the investment decisions and give us instructions for executing those investment decisions that have been done. In terms of reporting, we give those reports on a daily basis to the fund manager. We also give the Secretariat some of the statements. We also do reconciliations on a monthly basis and give reports to the regulators. And on a quarterly basis, we meet with the trustees to present our reports and position. We also give reports to the regulator, RBA. And finally, we do the annual submission and confirmations to your auditors, and also present these reports to a meeting like today when we meet physically, and even now when we are meeting virtually. We hold 2 accounts for the scheme, fully segregated and not commingled with any other funds. And for each fund manager, the accounts are also separated. So we have the account that was being run by African Alliance and now is being run by ICA. And we also have the account that is run by Old Mutual. To confirm for you the assets that we were holding, we held the assets worth 6.4 billion. Spread across, we had 8.8 million in cash. We had 667.8 million in deposits. We had 4.3 billion in government securities. Those are the bonds. We had 70 million in corporate bonds. We had 1.1 billion in shares, or also known as equities. And we also held the title deeds for the properties worth 152 million, bringing that total to the 6.476 billion that was closing the year. Finally, is just to assure you members that your investments are safe, and all that pertains to the activities of a custodian was done as is required. And in closing, is to assure you that CoopBank is ready to provide you with the support to access the mortgages that have been recently enacted under the new regulation. And of course, we'll work with the Secretariat and the Board of Trustees to make sure that this can become a reality. As you've seen, there's some interest from members, and hopefully KenGen can become the first scheme in the country to provide leadership and show others how this is done. Thank you. The questions can be presented in the Q&A as was guided by the chairman. Back to you, Mr. Nadome.
Yeah. Thank you. Thank you very much, Lydia, for giving us, the members, that assurance the money is safe. And I can also assure you that we'll take the lead on KenGen pension scheme. Otherwise, thank you. Now it's our turn to call Kanza Musyoka, who is representing Azamara Financial Services, to present the administrator's report to our esteemed members. So Kanza, back again.
Thank you, Chair. Good morning, Chair, and the trustees, fellow service providers, and members who have joined us during this DC AGM. I'll take you through our administration report, and it will cover 3 areas. Again, I will touch on the benefits for the DC scheme. I see there's a member who has posted a question on what is the difference between the DB and the DC. So you'll be able to see the difference as I go through this presentation. I will touch on the recent legislative changes and just talk a bit about the impact of COVID on retirement and financial planning. Next, let me skip this because I talked about it. Let me focus on the benefits of the DC scheme. Now, the DC scheme benefits are based on the contributions and the interest that are earned on somebody's account. So as you can see there, what we are showing is somebody's retirement pot, a member of the DC scheme. We have contributions coming in from the employee at 10%. So employees make contributions at the level of 10% of their pensionable salary. Employees are also allowed to top up and make additional voluntary contributions. And so together with the employee contributions, the employer also makes contributions at 20% of our members' pensionable salary. So these come in every month and the contributions are credited to the members' accounts. And every year, once we do the audit and we assess the financial position of the scheme, the investment returns are determined, and this is then credited to your account. So on your account, you will always see contributions, employee and employer, and you'll always see investment returns. Now, this will continue to grow year after year, and once you choose to exit from the scheme, then your benefit will be computed, and as shown there, your benefit is based on what has accumulated, your accumulated contributions and interest. This is different from the DB scheme where you saw that the benefit in the DB scheme is based on a formula which is 2 times your pensionable service, that is the years you've served in the scheme, times your final pensionable salary at retirement. So let's see how you can access the benefits. On early exit, again, below the age of 50 years, you can access the cash amount that is allowable by law. In the DC scheme, what you're allowed to access is 100% of your own contribution and 50% of the employer's contribution with interest. Similar to the DB scheme, the law does not allow you to access everything at one go if you're below the age of 50, and this is because the law wants the members to preserve their benefits in the scheme so that they can use it for its intended purpose. And the intended purpose is to provide you with financial cushion at your retirement, during your retirement years. So you can access the amount that is payable, and what remains, you can preserve it in the KenGen DC scheme until retirement, or you can transfer to another scheme for the employer. Secondly, you can choose not to access anything. So if you do not want to access anything, then you can leave your benefit in this scheme, or you can transfer to the pension scheme of another employer. At retirement, the next slide is at retirement. This again is from the age of 50 years. What is payable now, we look at what has accumulated, both employee and employer. And because the DC scheme is similar to the DB scheme, which is a pension, your scheme is a defined contribution pension scheme, then we must pay you a pension first and foremost. So from this scheme, you can be paid a pension, or we also have the alternative of an income drawdown, or you can choose both. So as I explained earlier, a pension, or which is also known as an annuity, is just the monthly payments that you will receive from a life insurance company, and they will pay you this for life. Or you can choose to invest your money with a financial service provider who you get into arrangement to draw down your money as you wish. So this is referred to the income drawdown. So you have the option of an annuity or income drawdown, or a combination of both. And because the law is aware that, at retirement, you may have some obligations that are still unpaid, so then you do have the option of taking 1/3 as a lump sum. So you can choose to take 1/3 as a lump sum, and the balance of the 2/3 is then used to purchase you a pension or an income drawdown, or a combination of both. Immigration, this is when you're leaving the country with no present intention of coming back and you must provide evidence. Then what is payable is the accumulated contributions with interest paid as a lump sum. In the case of demise, what is payable again is the lump sum. You are paid a lump sum that is based on your is paid to your benefit. What is paid to your beneficiaries is the lump sum of the accumulated contributions plus the insured benefit that is available in the scheme. Now, if a member passes on in retirement, then the benefit that is payable will be based on the contract you signed with your annuity or income drawdown service provider. Right, so members, that just summarizes the benefits that are payable under the scheme. I mean, we've been going through this all the time, so there's nothing much has changed, and I confirm that the benefits have not changed in the year 2019. So let's look at some of the benefits that have come, some of the changes that have come through this year. The first change came through the Tax Law Amendment Act, and the laws that came in affected the Income Tax Act. So as a pension scheme, you are regulated by the Retirement Benefits Authority and the Kenya Revenue Authority. The Kenya Revenue Authority comes in because of the aspect of tax. So while, yes, we say pension has some certain tax advantages, the tax benefits that are given are up to certain limits. And that's why when a member is leaving, we have to look at we have to put into consideration the tax benefits the member has accrued, and the balance is then taxed. So let's look at the changes that came through. So the first one was the corporation tax that came down from 30% to 25%. So this means members who are contributing above 20,000, this is the tax deductible threshold. Members who make contributions above the 20,000 limit, when their benefits come to the scheme, they are not taxed. But every year, as those contributions earn interest, the interest is taxed. So this year, the interest that will be computed will come down from 30% to 25%. So it means members will have less interest to pay on their contributions in above 20,000. The second change is changes in tax months that are used to pay benefits. So this is a good period for people who are leaving because they pay less tax. So one, we have two tax bands that we use. They're the tax bands we use when members are withdrawing after 15 years of service or after the age of 50 or on ill health grounds. Now, before COVID, these were the tax bands, as you can see there. The first 400K was taxed at 10%, the next 400K, 15%, and so on and so forth, until above 1.6 million, this was taxed at 30%. Now, during COVID, the first 400 is taxed at 10%, and this goes on with any amount above 1.2 million taxed at 25%. So we have an illustration that will actually show this difference. We have a member here who has 4 million, and this is their gross benefit. Now here we assume this member has served for 10 years. Simply what the law provides, for every year a member is in a scheme, they enjoy 60,000 tax-free, up to a maximum of 600,000. So for this member who has been in the scheme for 10 years, he enjoys 60,000 times 10, which is 600,000. So let's say if I had worked for 5 years for KenGen, then my tax-free amount would be 60,000 times 5, which is 300,000. But back to my example, we've assumed this member has been in KenGen for more than 10 years, and so the tax-free amount they enjoy is the maximum, which is 600,000. So from 4 million, we deduct 600,000. The balance is 3.4. Now we subject the 3.4 to tax. Before COVID, this member would have paid a tax of 820,000. If this member retired during COVID, then they would have paid a tax of 730,000. So you can see in this case, there's a tax saving of 90,000. We can move on to the next one, which is, what if we are paying a member who has not attained 15 years of service or is below the age of 50? Now you can see the tax bands there. These tax bands are very different from what I've shown earlier, and mainly because as a member who is above the age of 50 or you've served over 15 years of service, then the tax rates are less. And mainly because pension scheme, the way the law is structured is to promote members to preserve and only access their benefit at retirement. So they are better, you get penalized by paying more tax if you access your benefit earlier. So before COVID, you can see the tax bands. These are just the payee rates that have been annualized. And because the payee rates have changed, then during COVID, of course, for a member who's less than 50 years and has served for less than 15 years, the tax bands are those that are applicable. The payee bands as they're applicable today. Let's see this from an illustration. Same member, 4 million, and is enjoying 600,000 tax-free. Then you can see taxation before COVID. This member would have paid about 949,000. And during COVID, this member would have paid 777,000 in terms of tax. So here you can see a member retiring during COVID with such an amount, and we've assumed more than 10 years of service, would therefore get a tax saving of 172,000 shillings. So this is going on right now for any member who leaves. This is how we are taxing your benefits. So the number 2 is the Retirement Benefits Act. And this is just touching on what members have been talking about. The Retirement Benefits Act was amended to allow members to draw down their pension savings to purchase a house. And I think, as we are all aware, the regulations were signed this week. They've been signed but not gazetted, so we cannot yet implement them until they have been gazetted. So I think just as the Trust Secretary has said, once trustees have time to review the regulation, they will then communicate to the members on the way forward. Right, so those are the tax changes. Members, I'm going to the last section of my presentation, COVID-19 impact on financial and retirement planning. And yes, we are living in a pandemic world, and the future still remains certain and unpredictable, even as we adjust to new normals such as this, having an AGM online, which, as Madam CEO has said, was inconceivable a few years ago. Even last year, we could not have been able to fathom that we would be having most of our AGMs online. But as we live during this period, the best we can do is anticipate the challenges and opportunities. Once you identify the challenges that are unique to you, you can then be able to minimize the negative outcomes of COVID-19. And once you identify the opportunities that are present to you as an individual, you can then see how you can be able to maximize those positive changes that are coming through. So it's a period of resetting globally and also to us as individuals. So let's look at the individual. And during this pandemic, I'm sure many of us will be able to connect with this. We've all questioned about our health. We're all worried, or for those who have not contracted, will I contract the virus? When we look at our family, if anyone gets very sick, can I be able to afford an ICU bed? You know, and I can say for most of us who are employed, when we look at companies that are closing down, you then are worried whether, how long will I have this job? And we've seen many businesses that have been affected. And of course, they also have their own concerns. When we look at your financials and your bills, you're saying, will I continue to be able to afford rent and school fees? If you're like me, when the announcement to go back to school was made, I was surprised because I had planned to pay school fees from January, not from November at the full rate, because most of the online schools are at a subsidized, online learning has been at a subsidized rate. When you look at your investments, you can see some of your investment losing value and you're worried because every time, it's normal that every time our investments drop, there is concern because we want to see our investments giving back money to us. And when you look at your pension, you are worried, how will this impact my retirement pot? Mental health is something all of us have gone through during this, mental health is something many people have been affected during this period because there have been a lot of anxieties. And when you look at your social life, you know, if you're single like me, you're wondering, when will I ever date again? Because we've been very closed up and not able to socialize as we've been used to. So how do we survive financially during COVID? The next slide. Right, and you can begin by assessing your financial situation. Now, if there's a rule that applies during such times is, in times of uncertainty, the more savings you have, the better. And particularly here, the emergency funds. If there's something many of us should have learned during COVID is the importance of emergency funds. I know as Kenyans, we have never paid enough attention to putting money aside. We go for the investments and the big investments. But if there's anything we should have learned during COVID, is there's a place for emergency savings. So if you've not saved, you've not put aside your emergency funds that help you better through such times, consider pausing or reducing any investment-related contributions so that you can start or increase your savings. So the aim is that your emergency savings should be able to tide you over a period of 6 months if you lose your income. And the thing is, you know, if the last thing you want during such a period is to have all your cash tied up in your investments, because if you're forced to sell those investments, you'll sell them at a loss. So begin saving for your emergency fund and build it to a place where you find it's comfortable and can be able to tide you over a period of minimum 3 to 6 months. And once you've attained that, then you can go back to your investing. Next slide is, let's examine our spending. You know, during this time, we should focus on getting our essentials in place. So food, housing, utilities, and any medication, among other things, and reduce our non-essential spending, restaurant, meals, buying premium brands of commodities. Those are things we can consider reducing during this time. And you know, we've seen something very common in the beginning of the pandemic, where we saw so many people stocking up in groceries and household items. In most financial advisors' view, it may not be a good idea because it tends to lead to unnecessary spending. People tend, when you start bulking up, you tend to go overboard. You don't limit yourself, and so you start spending on unnecessary items that you may not use. Like some of the things I bought in the beginning, 6 months ago, I still see them there, and I'm wondering, why did I spend money buying all these things? But because I was in the mode of panicking. like many of us were. So as we go shopping, the best thing we can advise is prepare a list so that you can stick to your budget. And because right now, supermarkets are looking very attractive with all the decor and the lights, and you can find yourself buying things just because they look attractive and not that you need them. As we always say, don't forget the budget. The budget is a tool. It helps you to know where your money is going, to spend on the important things, and also to make sure that you spend your money on the things that you like and give you back joy. How do we survive with our creditors? Speak to them. If you can't pay rent, speak to your landlord. If you can't repay money borrowed from your friends, speak to them. And if where possible, speak to your bank. Fourth is avoid accumulating debt, more debt. I'm sure we've seen many people using credit cards, accessing mobile credit so that you can be able to meet your budget, especially where your income has been affected. So if somebody's income has been reduced or your spouse income has been reduced or they've lost a job, you're trying to see how do we tide over during this period. And you may find yourself easily going to Tala and Branch and KCB M-Pesa and Mshwari and borrowing money. It looks very good because you can say by next month I will look to get money to repay the loan. But where possible, avoid taking this debt because interest payments will catch up. The interest payments on these short-term loans are so high. And so eventually you have to pay. And if you don't pay, the interest continues to grow. So what we would advise is focus on reducing your spending so that you can free up cash and this cash can meet your most important needs. You only use credit cards and other forms of credit as a last resort. So to my last point is find ways to bring in more money to survive financial uncertainty during this COVID. So let's say you have a reduction in the household income due to loss of a job or reduced income. In this case, it's okay to work at a level below your skill set. And also don't forget to monetize your hobby and skills by freelancing or setting up low-cost side hustles so that you have more money coming in. And so to my last slide, I've taken you through how to survive financially during COVID. So let's look at financial security during COVID-19 and beyond. Of course, take stock of your retirement savings plan. I think an AGM like this is a very good time for you to assess where you are, look at your statement again. If there's an important lesson we've learned about COVID is the need to save and plan in advance because the future is very uncertain. While COVID-19 is temporary and can change, but once you retire, there's no going back. You cannot change the hands of time. And so the best advice here is continue to check your benefit statement and measure your progress so far. So let me respond to a member who asked about our app, because you can access our app to be able to see what is your current accumulated benefit. Yes, we were going through an upgrade in this month of September. So any member who goes into the app, you will be able to see your benefit up to June 2020. And from 1st October, we should be able to bring it back to the current date. So the last 3 points, take time to learn about investments. Depending on your horizon and risk appetite, take advantage to invest right now when we have record lows. Don't be worried that the markets are low. Markets will always recover. They always have, and they will continue to recover. And then lastly, don't forget to update your nomination of beneficiaries form. Chair, that's the end of my presentation, and I'll answer any questions where you direct me to. Thank you.
Thank you. Thank you very much, Kanza. I think that was really stimulating. And at least we diverted from the numbers. You can see the presentation was so good. Some of the members, Florence and others, are requesting you share. I'm sure through the Secretariat, you should be able to share this presentation and the previous presentation with the members. Otherwise, that was good. And you only focused on ladies who want to marry. You didn't focus on the boy child who want to marry. That was interesting. But I think the comfort on this is that you should have faith. The single will be married, and those who have not married, I'm sure will be past COVID. Otherwise, thank you very much. Kanza, we now move to the auditor, that is Madam Teresa, to take us through the auditor's report on behalf of Deloitte. Teresa, you're not audible. You're muted, eh?
All right. Sorry for that. Thank you, Chairman. Good morning, Chairman, Board of Trustees, members, and all protocols observed. Thank you for the opportunity to present the audit report for KenGen Defined Contribution DC Scheme 2012 for the year ended 31st December 2019. Chairman, if you allow me, we were appointed during the year for the first time for the DC scheme, and I will take then the report having been read, the annual report, so that if you allow me, then I'll read our opinion.
Yeah, proceed, Teresa.
All right, thank you. Our opinion, the report on the audit of financial statements. We have audited the accompanying financial statements of KenGen Defined Contributions, DC Scheme 2012, the scheme set out on pages 10 to 27, which comprises statement of net assets available for benefits as at 31st December 2019, and the statement of changes in net assets available for benefits, and statement of cash flows for the year then ended, and a summary of significant accounting policies and other explanatory notes. In our opinion, the accompanying financial statements give a true and fair view of the financial transactions of the scheme during the year ended 31st December 2019, and of the disposition at that date of its assets and liabilities, other than liabilities to pay retirement and other benefits falling due after the end of the year in accordance with International Financial Reporting Standards and the requirements of Retirement Benefits Act. The basis for our opinion, we conducted our audit in accordance with international standards on auditing, that is ISAs. Our responsibilities under those standards are further described in the auditor's responsibility for the audit of the financial statement section of our reports. We are independent of the scheme in accordance with the International Ethics Standards Board for Accountants Code of Ethics for Professional Accountants, that is the ISBA code, together with ethical requirements that are relevant to our audit of the financial statements in Kenya, and we have fulfilled our ethical responsibilities in accordance with these requirements in the ISBA code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Thank you, Chair. That is our opinion. The full report of our opinion is from pages 8 to 9, and the signing partner is Fred Allo. Thank you, Chair.
Thank you. Thank you very much, Teresa. And this, after that, this takes us now to our annual report and financial statement for the year ended 31st, 2019. And the members, I propose that we take this as read. Now with that, then we move to, we are almost at the tail end, members. We move to the minimum agenda items, which I will be able to take you through. I now wish to take you members through the minimum agenda items. And during the year, the meetings held for the full board meeting and committees are as follows. We had 6 full board meetings, admin and communication committee meeting. We had 4 of them. Audit and risk management committee, we had 4, and finally, investment and strategy committee, we had 7. Members, the trustees' remuneration is as disclosed in the financial report. Currently, the scheme pays the trustees a net of shillings 28,000 for board chair and 24,500 for board members as sitting allowances. In the board's continued efforts to prudently manage the scheme investments, expenses, and give better return to you members, the board has no proposal at all to change its members' remuneration in this financial year. I would therefore like also to confirm that there were no changes in the benefits and contribution structure in the year 2019. Thank you. Now we move to the next phase, the Q&A session. Quite a number of questions were raised. And now I'll hand over this session to our Trust Secretary to respond, and any other panelists will be able to do the same. Otherwise, welcome, Trust Secretary.
Thank you, Chair. I'll go through the questions as they have been asked by members through the Q&A session and also as email shared to us. There's also the first question came from Isaac Mwengwenya. The request was for the statement. He was asking for his statement for DB&DC scheme. There's a benefits projection for him. We'll be giving this statement to him. The next one was John Minor was appreciating for his for the medical scheme for the scheme, which we confirm that was started in May. The next one was from Charles Mashami. The question was about the reason why we have changed insurance providers for medical scheme from year to year. Yeah, we have changed from NHIF to First Assurance and UAP. That is due to the regulation that were changed at NHIF. And we're also looking forward if we can be able to go back to NHIF, which was cheaper for members, but currently it's not accommodating our retirees. The next question was about Godfrey Mumbiri, asking about how many members you can include in your retirement, the medical cover. It depends on you, yourself, because this is self-funded. So it depends on your capacity to do that. The next one was from Onesimus Mutua. Your concern is well noted about members who have joined us with the impairment, hearing impairment problems. We'll take care of this next time. And for currently, we'll be able to share all the presentations and minutes for these meetings. And we again apologize for that overlap. The next one is from Godfrey Billy. He was asking about if it's possible to give an advance for members to access their retirement benefits as a loan in advance before retirement. Under the regulation, this is not possible. The next one for Peter Kalanja, talking about asking about mortgage regulations, and they wish to confirm that they were amendment to the mortgage regulation of 14th of September, and we'll be able to guide members on how to do this, and also we'll conduct members education on the same, and also we'll also be looking forward to amend our tax deed rules to ensure that it comply with these regulations. However, they have not been gazetted. We are waiting also for the gazette notice. And a question from Mola Ogali, how adding a lump sum as to AVC. We do not encourage lump sum as AVC for the scheme because of the issues about money laundering. So we encourage AVC to come through the normal payroll system and ensure the same is deducted from the employer. Also, we had a question from Mele Mudhuri about annuity purchase from one director, that is Britain. I do wish to confirm that we do educate our pensioners and we give variety of the annuity providers available. There's no one time we have ever given one annuity provider. We always give more than 3, and these are competitively being evaluated by the scheme. However, members have deliberate decision to make a decision on which provider to select, and most likely at this time, you find that Britain was giving a better annuity than other providers. Then you find most of the members went to Britain. Mike Chega is asking for us to share the presentation. We'll be sharing that presentation. We also had a question from Asaria on Soto, asking about the good return of 2019. Yes, 2019 we had good returns of more than 14%. And asking about the future this year and the coming years, we wish to confirm that we have diversified our investment. We are now in private equity and also in property, and this diversification will be able to take care of the small hardship that have been brought by COVID. And we, as much as we don't expect the same good return as 2019, we don't expect a negative return in this year where most of our investment have been faced with a number of challenges. Joseph Obongi asked if we will be taxing members above age 65 on their pension. The current regulation that were passed only taxes lump sum for members who live after the age of 65. However, the monthly income for pensioners above the age of 65 will not be taxed. We had a question from Nicholas Malita, how providers are remunerated. The managers are remunerated on percentage of the fund, custodian on the percentage of the fund, and also the number of transactions. Administrators are also remunerated on the of the membership of the scheme. We had Edward Willie, who asked whether there will be a double taxation. This due to a presentation from Zamala about the taxation of benefits. I would wish to confirm that we separate we would wish to confirm that we separate contribution from members, that is registered and unregistered. Contribution below 20,000 is called registered. Contribution above 20,000, which is deducted from your payslip after taxation, is called unregistered. And at point of living, the contribution that was not taxed at source is the one that is taxed at retirement, and the contribution that were taxed at source, they are not taxed at withdrawal at all retirement. So there's no double taxation. There was also a concern by Janet Watea. The question was majorly on the issue of pensioners doing the form of the existence, taking consideration that previously we'd use the sponsor offices to have the pensioners access the form of the existence. I would wish to confirm that we have been able to learn this exercise during COVID, and we have managed to get more than 95% of our pensioners fill this form. The form is now available on our website. We have guided pensioners on how to complete the form. And as much as these challenges with COVID, the exercises have been carried out with very few hiccups. Thank you, Chair.
Thank you. Thank you very much, Trust Secretary. Maybe may I ask Kanza if there's anything you want to add, maybe or reinforce?
Chair, no, Josephat adequately answered all questions.
Good, thank you. Thank you very much. So with that, then I would now want to move the Chairman's annual general meeting report for the year ended at 1st December. I want it to be adopted, and that now will require us to have a proposer and a seconder. So, Trust Secretary, if there is any member who is willing to propose and second, can you be unmute so that we can hear?
So, Chair, just also to confirm, the members who have asked questions later will be able to answer them separately, privately. For proposals, I will request the host to unmute members to propose.
Yeah, you can see there is Ross Kiende. Goodbye.
This Peter Kalanja and Mola Ogali.
Okay.
Host, please.
I propose.
Yeah.
Peter Kalanja has proposed.
Peter Kalanja, we want to hear your voice and name there. Okay.
Peter,
I'm Peter Mongi Kalanja, working in KenGen, and I propose.
Thank you. Thank you very much, Peter. So let's move to the seconder.
Mola, you have been unmuted.
The seconder, can the seconder be unmuted, Peter?
Mora Ogari, I propose. I second. Sorry.
Yeah. Thank you very much. Thank you very much, Mora. With that secondment, the annual general meeting chairman's report is duly adopted. We are now finishing members, and it's good we are doing it within a record time. I would like to thank each one of you for your invaluable support to the scheme in your different capacities. And I continue to urge you all to continue adhering to the Ministry of Health and the government directives. Let us all work together to flatten the curve. On this particular issue, I really urge the members, if you are watching NTV yesterday, the government spokesperson Oguna, what you went through with the COVID for 28 days, that is when it dawns on you, this is real. Yesterday also I was privileged to meet Dr. Shibanda, who is the General Secretary of Doctors Union, and I can tell you it's really worrying what he also went through, because he was symptomatic, and he said, when we talk to people, let's continue telling people this disease is bad. So as much as the curve is flattening, let's just thank God for those of us who have not been infected, and continue adhering to these particular guidelines. So that is what I will Those are my last remarks, and thank you very much, members, for attending this AGM, and we are looking forward to a better future and more representation maybe in the coming year. Otherwise, thank you very much, and maybe I think it's just prudent we have a second poll. So members, maybe before we close the meeting with a word of prayer, let's do a second poll. So Trust Secretary, kindly share.
Thanks, Chair. The last poll for this AGM is about nomination of beneficiaries. And we ask, have you ever nominated or updated your beneficiaries since you became a member of the scheme? Either yes or no, not sure, not applicable. It may not be applicable due to your faith. I would want to know this because this is really helping trust in case of the unexpected, and also wish to guide that retirement benefits are not guided by the will. You might be having the will, but the retirement benefits, the distribution of the benefits in case you are no longer there cannot be guided by a will. So the nomination of beneficiary helps the trustee to distribute your benefits in case you are deceased. This is to your spouse and the children. So we have less than 10 seconds remaining. I would request members to ensure that they do this so that we can also be able to guide you during the next other forums on doing this. If you have not done it, also all updating your beneficiary forms. With 5 seconds remaining, I will request the host to display the results. Chair, is a confirmation that we have a lot of work to do. We have 39% of members who have completed the form or updated their forms. 47% have never done it. A lot of work needs to be done. Not sure about it, we have 14%, and one member, 1% says that it's not applicable. A confirmation that we still have a lot to do. Thank you, Chair.
Thank you very much, Trust Secretary. As alluded by you, it is true this particular poll really will help us in improving. But I still repeat what the previous chair said. These guys who are saying not sure, I think we really need to go out of our way. And then if you look at the numbers, the attendance as of now, then attendance had gone up to 364, and now it's around 346, which is still a record number. But those who are participating seem to be few. So that tells you maybe they may be facing some challenges in terms of responding or answering these questions. But otherwise, Trustee Serem, we were just sharing with him offline that this particular session of the poll session, I think, is very critical. Maybe possibly members next year will even enhance this and have more questions, and even we'll even want to get a feedback from you, how we have conducted the meetings, whether you are happy and what can be done to improve. Otherwise, with that, with no any other business of which no due notice has been given, may I take this opportunity to thank you once again for attending the meeting. I now declare this particular AGM of the year 2020 officially closed. Thank you very much, members, and I request now Mr. Hassan Dahoud to lead us in closing prayers. Hassan?
Thank you. Let's pray. أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. الحمد لله رب العالمين الرحمن الرحيم مالك يوم الدين إياك نعبد وإياك نستعين اهدنا الصراط المستقيم صراط الذين أنعمت عليهم غير المغضوب عليهم ولا الضالين. In the name of Allah, most gracious, most merciful, and bestower of mercy, all praises and thanks are due to Allah, the owner of the day of resurrection, the most compassionate, the most merciful, master of the day of judgment. O Allah, it is you alone we worship, and you alone we ask for help. Guide us to the straight path, the path of those you have blessed, not those you have incurred your wrath. Know of those who have gone astray. O Lord, we praise you and thank you as we converge today through this virtual meeting for the KenGen DB and DC scheme AGM 2020. O Lord, we pray for the leadership of both schemes, defined benefit and defined contribution, the members, the service providers, and the regulator. We also pray for the Board of Governors and the Secretariat. O God, allow them to remain accountable. Allow them to remain accountable. Give them vision and wisdom as they make tireless efforts in advancing the welfare of the members and the strategic plan for 2019-2028 for both schemes are achieved and become reality. O Lord, we pray for our nation under this difficult time of COVID-19. Most merciful, we pray for our nation to remain tolerant and loving. Remove any prejudice from our hearts and allow us to love as brothers and sisters in humanity. O Lord, unite our nation around the principle of justice, peace, love, and faith. Put peace and love in our heart for the diversity that makes our nation so beautiful. سبحان ربك رب العزة عما يصفون وسلام على المرسلين والحمد لله رب العالمين. Amen. Amen. Thank you.
Thank you very much, Hassan. With that, then I think kwaherini na Mungu awabariki nyinyi wote. Bye bye.
Thank you, Chair. Thank you, Chair.
Bye bye. Thank you.
Asante, Chair.
Asante. Thanks, Daktari. Asanteni
Thank
sana.
you. Thank you.
Yeah, thank you.
It has been good.
Yeah, kabisa.
Asante.
Thank you.
Thank you, Chair.
Thank you very much, Elizabeth.
Thank you so much,
And
Chair.
Mary.
Thanks, thanks, Mary. Everybody, thanks.
Thank you,
Congratulations,
Chair.
Yeah, thanks for everything, for the success of making it a success. Okay.
Very nice, Chair.
Yeah.
Well led and everything.